Welcome to It's the Economy. It's a big day for the Indian economy, actually. India's GDP growth for the third quarter came in at an eye-popping 8.4%, with the first quarter and second quarter also getting upgraded above the 8% mark. Puzzlingly, however, a lot of the growth has come from net taxes, which means either higher indirect taxes or lower subsidies or both. The other worry within the GDP composition is that consumption is still weak, growing by only 3% in the latest quarter, while investment is doing the heavy lifting, growing by 10.6%. This disjoint has now continued for about 3 years. At the other end of the world, the US PCE inflation was red hot, rising at 0.4% month on month, but fortunately, that was as expected. Another important economy, China's PMI that came today, February PMI, shows that manufacturing is still contracting, but overall PMI is growing modestly. The number has come in at 51. So how will 2024 pan out for India, Asia, and what should markets take away from these macro data? I have with me one of the best in the business, Rob Subbaraman, the global chief economist for Nomura. Rob, good morning and thank you very much for joining us. It's been after a very long gap, actually. Okay, but first up, this celebratory economy numbers, Indian economy numbers, what do you make of them?
I think overall the numbers are good. So I know there's been a lot of discussion about indirect taxes and value-added GDP growth. I think it was 6.5%, so a bit weaker than the headline number. But even 6.5% would have India, out of all the major economies around the world, by far the fastest growing. So, and you know, when you look at the composition, I heard you just talk about how the biggest driver of the GDP is investment. That's very much what emerging economy needs. If you get strong investment, because India really needs to develop its infrastructure, hard and soft. And I think if you can have successive years of strong investment that creates capacity and allows you to keep inflation low and raise your potential growth. And I think India could be on the cusp of an investment boom. And if that really does happen, India can sustain maybe more like 7 to 8% GDP growth in the coming years with low inflation. And I think that would be an extraordinary achievement and very good for the prospects of India economy and markets. Okay,
so, that's very good to hear. Would you say that, therefore, we are on the cusp of an 8% growth because it's 7.6% forecast for the current year and last year 7%. So it's at least 3 years of consistent 7% plus growth.
I don't think it's set in stone yet that India is on a sustainable path. I think we need to see more evidence, in particular, I would say, of private investment picking up. I think the investment we've seen so far has been mainly led by the government, which is good. But hopefully, as interest rates come down this year, as we see stronger foreign direct investment into India, and with fairly healthy corporate balance sheets, we will start to see private investment after the election picking up strongly. I think that's the important ingredient needed to join the public investment. And if that happens for a couple of years, I will get more confident that India's potential growth is going to be an upward trend.
Okay, no, that's good to hear. I just wanted to point out one fly in the ointment. This consumption lagging investment by a huge margin. I mean, 3% versus 10% or 3% versus 11%. This is for the 5th consecutive quarter. You think if consumption continues to underperform so much, capex guys will hesitate. The expected long-awaited private capex cycle could get postponed if consumption is so low for so long?
It could, but I don't think it will. My base case will be that consumption has been weak in part because of the cost of living crisis and the high inflation that India has had in the past. And now that's starting to ease. I think also if you do get this strong capex cycle, it is going to create growing demand for labor as well. And that will also help boost consumption. So going forward, I think with inflation coming off, cost of living pressures easing somewhat, and if we continue to get strong investment, I think you will see that gap between the very strong, particularly public capex and private consumption narrowing.
Okay. Well, actually, since you're speaking about cost of living, let me get that first before I come to the US PCE numbers. China is much feared as having a very disinflationary impact all across Asia. Their investment in manufacturing is becoming the talk of all economists. Now, do you think this can actually make it a quandary? Because core inflation can fall in our countries, but food inflation is not falling. So that leaves the central bank in a dilemma. How do you see core inflation falling, and how do you see central bankers reacting?
Yeah, it is a bit of a dilemma. I mean, it's not just in India. I think in many countries, there's parts of inflation that are coming off more sharply than others. I would say, for instance, in Europe right now, goods inflation is coming off a lot, but services inflation is not. I would say, broadly speaking, I think central banks are generally looking at the overall underlying inflation. They're not putting over attention on a particular element. I know in India, food makes up a very large share of the consumption basket, and so is very important. I think the efforts to try to manage food prices more through fiscal policy and trade policy, I think is helping to an extent. But to be honest, food is very difficult. It's sometimes it can be less in the control of policymakers and more driven by climate change and the weather. So it's hard to really control that part of it. I would say that the bigger picture, though, is one of inflation clearly coming down in India, and particularly underlying inflation, which takes out some of these volatile items, coming down quite significantly. And I think that's a very good thing. And as I said earlier, if we do get continued strong investment that creates more capacity for the economy, India could be an environment where it has strong growth and low inflation, and that is a very Goldilocks environment.
Okay, we are going to put that bite of yours again and again. Sounds really optimistic. We are in a Goldilocks scenario. Now to the US inflation number. What's the sense you're getting with, month-on-month number coming still at 0.4%? Where's the Fed headed? And will we still manage a decent soft landing in the US?
So the inflation data that we've had for January has, across the board, been strong, right? It started with the CPI and then the PPI, and now the Fed's most preferred measure, the PCE, and particularly the core PCE, at 0.4%. And if you annualize that, it's well above the Fed's target of 2%. And even more so, the so-called super core measure, which is core services taking out shelter prices, that was up even more strongly at 0.5, 0.6. So right now, this is not the time for, I think, FOMC members to say that they are ready to cut rates. I think also with the economy doing pretty well, right, at the moment, and the labor market tight, I think the message and what the Fed wants to do is really just be patient and get more data. And they don't see any real rush to cut rates because the economy is doing well and inflation is turning out to be a bit bumpy. So they'll take their time. We think the first Fed rate cut will happen in June, and we're expecting 3 cuts this year: June, September, and December. So 75 basis points in total.
Okay, a final wrap-up question, Rob. Repeatedly, economists in India and even abroad keep saying that one of the clouds for the headwinds for the Indian economy would be the expected global slowdown. But that expected slowdown is not coming. The US economy as much has been surprising on the upside quarter after quarter. 3.2% for their fourth quarter, 4.4% for their second quarter. So do you think we are going to have a very good 2024 after all? We may be living in fear, but it won't be that much of a global headwind.
I hope so, but I would say it's a bit mixed. The 2 economies that are performing among the best out of the major ones are India and the US. Europe, growth is weaker. Japan is in a mild recession right now. China is in a deflationary slump. So I wouldn't say the world overall is growing strongly. There's parts that are clearly resilient. But I would say also, looking at the very leading data, such as the PMIs, there's some signs that maybe Europe is starting to pick up a little bit. So that is a bit encouraging. The very positive story I think that could potentially play out, we'll have to see, is the last couple of years has been a big supply problem for the world economy because of COVID, because of the Russia-Ukraine war, a lot of supply disruptions. That looks like it's eased off. And the very positive story would be, are we going the other way? Are we going to be entering a supply boom where AI and other factors boost productivity and we have very strong immigration? That could be a very positive environment for strong growth and low inflation. We'll have to see, but there is, more and more talk about that possibly playing out in the US.
Okay. Rob, thank you very much for that optimistic spin that you are giving us about the global economy, about the possibility, and certainly what you say about the Indian economy, creating capacity and possibly in a Goldilocks scenario where inflation is under control and growth is sticking fine. On the cusp of an 8%, but not yet cast in stone. We will take that with both hands. Thank you very much for joining us. The stock markets are in a celebratory mode, taking Rob Subbaraman very positively 1% higher at the highest point this morning for the Sensex and the Nifty. Wrap up on Bazaar. Chartbusters will take that exciting story forward.